Are you a real estate agent, realtor, investor, or are you in the real estate business and you need new listings and deals? We have a solution for you, and that solution has guaranteed results. How much would you pay to get face-to-face with a homeowner that wants to sell their home? What if you also got their email address and daytime phone number? And what if this homeowner also scheduled you to come to their door at a set time to meet with you? Sound too good to be true? It isn't. And it is 100% guaranteed for you to meet face-to-face with a real homeowner who really needs to sell their home. Not only will you get this remarkable contact system and its 100% guarantee, at no additional charge, you will get weekly coaching, documents, and training on how to get that homeowner and convert them into a new listing. When you purchase, you'll also get a one-on-one walkthrough so that you can start using the system today. Visit www.thelistingmonster.com. That's www.thelistingmonster.com. Or call Diana Ortiz at 213-706-0040. Stop wasting time the old way. Use a monster and get actual results today.
Welcome to the Honish Report, hosted by Lee Honish. The Honish Report is a look at the real estate market and creating effective marketing plans for realtors or investors to get new listings and deals. Your host, Lee Honish, has over 20 years of experience in real estate, banking, and marketing. Over the last 6 years, Lee has developed cutting-edge marketing and was named one of the most innovative marketers in America. With over 1 million views, Lee continues to be an advocate for the entire real estate community. Enjoy today's show.
Mortgage applications rebounded following 2 straight weeks of declines. According to the Mortgage Bankers Association, they rose nearly 3% from the prior week as borrowers moved to take advantage of low mortgage rates. And much of the home mortgage activity was due to refinancings and not new purchases. But there are still some homeowners who haven't taken advantage of these historically low rates and are paying a rate above 5%. Diana Olick takes a look at why.
Positive economic news on the home front just made homes a little more expensive. As investors bailed out of the bond market, the yield on the 10-year Treasury, which mortgage rates loosely follow, rose to the highest level in weeks. So the average contract interest rate on the popular 30-year fixed is now around 3.5%, which is about 1/4 percentage point higher than it was last week. Last week, rates dipped a little on fears in the European banking community, but Matthew Graham at Mortgage News Daily says the potential for a European taper tantrum like we had here in 2013 will inevitably create an uptrend in rates, which may have already started. Which begs the question, if rates have nowhere to go but up, why are 1 in 4 borrowers with rates above 5% not refinancing? CoreLogic ran the numbers and found that a lot of these loans are either seriously delinquent or the borrowers had once been delinquent, so they wouldn't qualify for a refi at today's low rates. Another chunk of borrowers have so little balance left on their loans that a refi wouldn't really be worth it. And still others have loans owned by private investors, making a refi more difficult. That leaves 13% of eligible borrowers with rates above 5% that could save a lot on a monthly payment. The question, of course, is why don't they? For Nightly Business Report, I'm Diana Olick in Washington.
Housing, which may be showing some signs of cooling off just a bit. Buying slowed yet again in August, with fewer people signing contracts to buy existing homes. It is the 3rd straight drop in so-called pending home sales. And as Diana Olick reports, realtors blame it on a lack of supply, which is hurting affordability.
First-time home buyers Tyler and Marisha Mullen are doing the final walkthrough before closing on their 2-bedroom D.C. home. They knew they wanted it as soon as they saw it, so they wasted no time making an offer. 8 months of house hunting taught them that.
It was a bit shocking when you're trying to find a place within the right price range, and as soon as you start looking at it, it's gone.
The number of listings has been dropping for 15 straight months nationally, and realtors say it is the primary reason for falling sales and rising prices.
perhaps the buyers are exhausted. They are not excited about the low inventory choices. And furthermore, home prices consistently rising above people's wages. People are getting just knocked out.
1/4 of U.S. housing markets are now less affordable than their long-term historical norms. And nearly 2/3 of U.S. counties are seeing home affordability worsen compared to a year ago. That according to Adam Data Solutions. While some hot markets like San Francisco are starting to see prices ease, other markets in Texas and Colorado are seeing double-digit gains.
The market simply needs more homes, but home builders are not ramping up production enough to meet demand. And only now are they starting to turn to starter homes. That'll help first-time home buyers down the road, but not today.
I think that's what we found to be the most surprising is we saw a place listed maybe on a Wednesday and we would schedule to go see it on Saturday, and by Saturday morning we got a phone call that, well, it's already under contract.
Looks good.
The Mullins advice, if you want to move quickly. For Nightly Business Report, I'm Diana Olick in Washington.
Hi everybody, welcome to the Hanish Report. My name is Lee Hanish. Today, buyers, sellers, not interested in basically buying or selling. Where does that come from? Why is it happening? We actually have some audio clips on the other side, straight off of YouTube via CNBC, of reports that have gone out via the reports that Diana Olick has put out in regards to housing. And this all sort of stems from consumer confidence dropping, right? So we know that sales are dropping. We know that interest rates are low. We know that the jobs reports are kind of flat. Basically, nobody can afford to buy in the current climate. What's that mean to people who want to list and sell their house, right? So they're seeing actually that people don't even want to refinance. They're not taking any chances. So between the possibility of rising mortgage rates, the overheating of home prices, and basically nothing for sale, and on top of that, the pre-election jitters, the list of reasons for consumers to lose confidence is growing. In fact, the share of consumers who think now is a good time to buy fell by 5% in September. That was a survey conducted by Fannie Mae. That was one of the biggest drops in quite some time. The decline in the HPSI over the past 2 months from the severe high in July adds a note of caution to our moderately positive housing outlook, said Duncan, Senior Vice President and Chief Economist of Fannie Mae. The starter home tight supply and rising home prices, as well as the unsettled political environment, are likely giving many consumers a chance to pause or question their home purchase sentiment. So you couple that with the September employment report being basically mixed, right? Wage growth is strengthening, but not as much as the prices in the homes are going up. Construction jobs increase, suggesting more homes might come onto the market in coming months or even years. But housing starts for single-family residence home are not really in great numbers. It's a very small number. Construction spending fell in August and July, so now the builders are even losing a little bit of confidence. A blah September jobs report gives no impetus for anything on the economy's to-do list. There's no sign of an overheating economy that would justify a rate hike. No groundswell of construction hiring that would finally hint at a return to a normal pace of housing starts. No big wage gains that would give hope for renewed productivity gains. Just a stubbornly average report at a time when the economy is looking for a jolt of spectacular. And that's from the Redfin's chief economist, Nella Richard. Doug Duncan was quoted as saying, housing seems to have hit a soft patch, with residential investments likely posting a second consecutive quarter in declines. So we go on. Pending home sales have dropped, which represent signed contracts by existing homes, right? We all know that. They have fallen for the third straight month, according to the National Association. Housing demand is strong, but supply is tight, which is creating the price hike for those that don't know. Housing seems to have hit that soft patch, said Duncan, and it is a severe issue. So what does all this mean to you? Well, I'm just telling you that buyers and sellers are in low demand at the moment. I think today was more of a reality check on what's going on for all of you. I know that you're having difficulty getting listings. I know you're having problems getting buyers. I think the public perception is based upon articles written by people like Diana Olick. I believe it's based on news reports. I believe it's based on the confidence of other real estate professionals and investors. I know that we are at a record low on home ownership. I think it's going to be one of the more difficult winters. I have growing concerns about the bubble that is being created in the Canadian market and in the China market. It tends to point that there's a bubble within the U.S. market, so you can believe that whether or not. The reality is nobody wants to buy and nobody wants to sell. There are basically 1 million of you who do real estate for a living. We can go for a short supply of just the people who listen to this broadcast, right? So let's just say that this show that I do is listened to about 10% of the active realtors, maybe closer to 20%, a couple 100,000 of you, plus or minus. And you're looking for nuggets of what the market's doing, or you're listening to whatever marketing I'm talking about, but you're looking for an angle. All right, so here's what I've got. And it's nothing all that encouraging, to be perfectly honest. I've been saying this now for the better part of the summer, before inventory started to do what it's doing. So I'll say it. You're going to have to create a specialty. You're going to have to create a higher demand for your service. If you're a buyer or a seller's agent, you need to create an opportunity that makes you special, right? At the beginning you heard, excuse me, at the beginning you heard the CNBC News reports from Diana. I read to you from an article that Diana put out. She's nobody. Some of you are Fox News people, okay? And some of you are CNN people. I don't think any of that matters. All of the information filters down. So if the media doesn't have confidence in the market for whatever reason, they're putting out information, okay? Factual or not. Let's just say it's all made up, okay? Let's just say that everything I just told you and the clips that I just played from YouTube are all made up, okay? And everything that Fox says about the real estate market is all made up. And everything that's on CNN about the real estate market is all made up. Got it? Let's take that assumption. It doesn't matter, because it's still going to filter down to the homeowners, to the people who buy and sell, and they're going to believe even what's made up. They're not doing that homework, okay? All it takes is for a buyer or seller to go online and find one of these articles or one of these statements to create doubt in their purchase or their sales. And that is what will affect you. That's the bottom line. You need to create for yourself a specialty, right? You need to create a higher demand for yourself. You need to create a situation that makes you unique in the real estate market. Eventually, most real estate agents will start to opt out for a Redfin type model. They'll start working hourly rates to go show houses, because most buyers and sellers are going to spend their time online, window shopping online, where it's safe, without a real estate agent breathing down their neck and trying to close and convert the sale. Why? Because anybody who wants to buy or sell right now, if they even put their hand up in the air, they will be attacked by 50 to 100 agents in their market who will hard close them, hard mail them, hard call them, hard knock them until they have